Well, the last time you were here, we were looking at Ellies and its drive towards energy efficiency, with the company operating an energy efficient building. Today, the focus on your results and still continuing to be pretty impressive. We've got, full year earnings, headline earnings per share coming in smack bam in the middle of your trading forecast that had been pegged out. You've got to be happy, with the kind of results that are coming through and the sustainability that we're seeing in terms of continued earnings growth performance.
We're very, very happy with our results, and we hope to impress on the market that even though Ellies is a fledgling company on the JSE, we're not a fledgling company in business. We've been trading for 32 years. And our growth we believe will continue throughout. We've got a nice strategy, the diversification works for us, and we're still very bullish for the next year.
Let's go into that strategy, because it's paying off in dividends here, because you've got a consumer in South Africa that's still under pressure despite interest rates sitting at all-time lows. You've got inflation coming to bear, and debt to disposable income within households still pretty extensive. So how exactly are you achieving what you are?
Well, a lot of our products aren't in the luxury product range. It's more in the essentials. We'd like to believe that we're still an entrepreneurial company. So when it comes down to our buying as well, we're looking for gaps in the market. We're looking for future growth areas. That's why we've gone into renewable energy. Soon we'll be launching our light bulbs, being CFL light bulbs, LED light bulbs, etc. So we're really going into areas that we believe have got long-term growth prospects.
But again, that's going into a sector where you've got depressed conditions in the building sector. No one's too optimistic about how soon activity within that space is going to be picking up either. So what's underpinning your confidence?
We still got a lot of confidence in South Africa. Yes, the market is down. Yes, it is tough times. We'd like to believe that by pushing through wiser ways for people to operate in their households. In other words, going to energy efficient products, going to surge protector products. We're still waiting for the DTT to come through, and hopefully it will be coming through. That's still in our pipeline as well. So we're generally in the right areas. We're also looking to the future. We know people are hit hard in their pockets, so how can we save them money? How can we give them value for their money spent?
Let's take a look at that DTT, because it's digital terrestrial television that we're looking at, and it's a migration rollout that's happening throughout Southern Africa. So how exactly are you going to be affected by this migration?
We'll be affected very nicely in that we're the largest manufacturer of TV antennas in the Southern Hemisphere, with approximately a 70% market share. So with the DTT rollout, a lot of the areas will be on new frequencies and require new TV antennas. So what we're looking at is around about 50% of TV antennas would need to be changed for the DTT rollout. And Ellies should benefit from that, as well as the distribution of the DTT boxes. We have our agreement with LTEC UEC, where we'll distribute their set-top boxes. So we'll offer, once again, a holistic approach to the DTT rollout, from TV aerials to installation to the DTT box itself.
While that plays itself out, you're also extending your reliance on government spend in particular. I mean, you've successfully completed your first energy-efficient housing project. How's that taking off, and how's that relationship with government right now faring?
It will keep on growing. I think the whole renewable energy sector at the moment is very slow to take off. People are still very skeptical about going to renewable energy on their households. But I believe with the last electricity increase as well, slowly but surely people will start seeing the rands and cents saving in their pockets by going the renewable energy way. Both the people with existing households and government going into the housing projects. It's no good building a housing project and not giving a person water or electricity. And by using renewable energy sources, you can give them the full housing development.
Is it becoming an easier sell? Because we know when this was first talked about, there was a lot of challenge being put to the table, and first and foremost, stood out capital outlay, because the initial cost of going through this route could be a pretty expensive one.
There's a lot of misconception. Yes, it is a capital outlay, but if you, for example, took a solar water geyser system and you took it on your bond, from month one you'd be cash positive. Your saving on electricity is greater than your expenditure paying back on the bond. So I think that, there's a lot of mistrust. There's a lot of uncertainty when it comes to renewable energy, but slowly we're going to try and help promote renewable energy and the effects and the benefits to the men in the street and their households.
Are you dabbling in the export space as much as you'd like to be? What's your outlook in that regard?
Exports have been a little bit slow with the strong rands, but we're still pushing ahead. As you know, in the last year we opened up a new branch in Swaziland. We've got now new agencies in Zambia as well. And we slowly want to grow into Africa, being very cautious, obviously, with the trading. But we see renewable energy as well as the DTT as new avenues for us into Africa.
How has the currency actually come to bear on your business? Because you benefit on both sides of the coin here, where you also import a lot, in terms of what you need to keep your business going.
On the trading in South Africa, it's been pretty level in that even though the rand has strengthened, a lot of the prices from China have gone up. So your actual FOB values have gone up dollar-wise. So it's created a balancing effect where prices kind of stayed stagnant for us. But it did hurt the exports because most of the goods that we export are manufactured locally. So it affected on the export side. We're hoping, though, the rand stays where it is and just to maximize on our efficiencies and try and get the business in Africa on efficiencies and costing it on that basis.
Well, we're going to be looking at Mercantech's CEO Confidence Index that was released a short while ago. So let's get your perspective from the CEO of Ellies. I mean, your broader view on the economy right now and where we're headed for, let's say, the next 6 months.
I think the next 6 months are still going to be pretty tough. The consumer, as he's starting to recover, so he's having the electricity price increases, so inflation's going up. So it's hitting the man in the street very hard. I think the next 6 months are still going to be very tough for the consumer. And I think what's really happening, what we've seen in our business, the consumers being a lot wiser on every cent and every rand being spent. And that's why I think Ellies offering a value for money prospect to the consumer is making headway. I think that's what the customer is looking for, value for his money.